Hey guys, welcome back to the Capital Mindset Show. Today we're going to be going over a stock called SOFI Technologies. Okay, so this was requested on the live streams and as well as in the comment sections. So I'm covering here today, might as well. I know that the stock might be down today, and I try not to make videos in stock when it's down because it's easy to kick it while it's down, but I have to get through the list. So here it is. So SOFI stock, we got to actually go over the price action first. I think it's appropriate to talk about the price action, and the price action is not too good. Over year to date, down 50%. 1 year, it's down 53. 5 year, it's down 23, but it hasn't even been around for 5 years, so it's not really the case. More or less in the 1 month, it's actually been pretty abysmal, underperforming the market. For the 5 days, it's most of the drawdown, about 15%. So we'll actually discuss what the heck happened. To begin, they are heavily involved in student loans, student lending. The Biden administration has extended the student loan moratorium till I think August 31st. Not so good for SoFi's growth prospects because that's a big portion of their business. Now we're going to get into the meat and potatoes of this, and let's actually go over here. So this is Motley Fool. The reason why I'm bringing this up is an article that says it. I've seen it time and time again on YouTube. People saying, "Hey, this is a stock that is focusing on high income earners," right? And so it's over here. SoFi is seeking to become a digital bank for all persons of financial needs, targeting high income earners who are poorly served by their current financial institutions. Its lending division currently offers student loans, personal loans, and home mortgages. Right there, I'm already cringing because it's like, okay, student loans, high income earners. What, you're trying to target the high income earners with stupid amounts of debt? Maybe, like that's the medical school students, okay? Maybe that's like the software engineers, okay? Maybe. But are you really just targeting them, or are you targeting like a wider audience of student loans? And if that's the case, then I'd be a little bit more concerned as to who you're really targeting. And in reality, let's actually go over here, and I'm just looking over here, and really, what do they have to offer me? Okay, so invest platform, but the investing platform is lackluster. You don't really have as many options. You can't really borrow against it in meaningful ways. So really, high net worth individuals, high income earners, I don't really think so. Personal loans, pay off high interest rate debt. Like, are you sure? Are you sure you're targeting high income earners? That's new to me. I mean, maybe again, like maybe you can make the argument, like, you're targeting like the medical school student who's just out of medical school and has a lot of debt. And then, maybe they want to consolidate that into a different kind of loan because they're a lower risk client. Or maybe you got the law student, maybe you got the accountant, right? These careers that are traditionally more stable. That sounds to me like you're targeting people with, consumer debt, okay, personal loans, consumer debt, and all that jazz. Home loans, okay, that's up in the air. That depends. I don't really know the extent of what you're getting, but you are going to be competing in that front with all the larger banks. Credit card, okay, unlimited 2% cash back. That's standard. That's really standard. I mean, you got Citi double cash back, unlimited double cash back, so it's like the same thing. And then I looked everywhere. I can't find the thing that says if I put X amount of money with them that they're going to give me a certain amount of benefits. See, look, if we see this offer for $610, I'm going to laugh at it if I find out how much it is. All right, so move on with SoFi, and we're seeing this together. So I haven't even seen what this is. So my reaction will be genuine. All right, so tell me how much I have to give you, you silly children. How much do I have to give you? Come on, am I blind? I think I'm blind. You guys have all seen it already, and I'm just blind. They're not making it easy, at least for me. But anyways, get up to $1,000. I want to see get up to what is okay, here it is. What is the terms and conditions? Give me terms and conditions. Oh, this is okay. So it's an R&D. Okay, I'm not interested. Whatever. People, that's like appealing to gambling in some capacity. Let me see this one. Add to your paycheck. Don't tell me they do 2 days early. Okay, how much do you guys take? Load the terms and conditions. What a poorly optimized website. Okay, I can't even get to them. Okay, so no account fees, 2 days early paycheck. Feel the magic of payday up to 2 days early. See, this doesn't sound like high income, targeting high income individuals. It doesn't. It really doesn't. People who generate lots of income don't care about having it 2 days. That sounds like lower income. Nothing wrong with being lower income, by the way. Okay, but this just sounds like it. The only point why we're even talking about this from this point is that a huge bullish bullish case for this company is that they are appealing to high income earners. And it's like, I don't see that. No overdraft, no fee, overdraft coverage. Okay, cool. Well, that's a convenience everyone offers. Cash back close to home, get up to 15% cash back at local stuff. That's pretty cool. That's about, oh, on the debit card. Sucks. No. Automatic saving features, that's standard. This is cool, but like, I don't really care. What is that? Like $10,000 gives you $100 a year, something like that. Yeah, cool. I don't really care. So $100,000 would give you about $1,000 a year, and $1 million would give you about $12,000 a year. Maybe you have $1 million. Maybe you're like, oh, I'll take that. Yeah, sure. But you know, it's not really something to scream about. Sign up. Okay. Requires a direct deposit check in your bank savings account. All right. I don't really care about this. All right. So products, let's go here again. Let's click on the products. So personal loans, SOFI Protect, private student loans. I'm not seeing anything that's like crazy amazing. SOFI at work, make SOFI work for your company. Okay, cool, whatever. All of this stuff. Okay, the insurance part is kind of cool, but I think they sell you. Let me see if they do directly the insurance. Check my price. Yeah, you see, okay, powered by Lemonade. So far, teamed up with Lemonade to renters. Yeah. So you see, there you go. They don't really even do it themselves. They're just like a seller. And by the way, Lemonade's also a seller. So it's not even that they necessarily do it. Well, that's getting into like the business model of Lemonade, but we're not talking about Lemonade today. Okay, so pretty much my point is that a lot of people are saying that, hey, this is a company that, you know, relies on high net worth individuals. Don't see it. I don't really see it. I mean, let me know down below why I'm wrong, because I assume that there's probably a lot of people out there who are investing in SOFI and will disagree with me. So also, when I looked up SOFI, just out of curiosity, just looked it up, I noticed that it is a heavily talked about stock on YouTube. Okay, so a lot of people talk about stock, like more, and I think I glimpsed through, yeah, I glimpsed through this one, glimpsed through this one. Yeah, glimpsed through a couple of these really just to see what some people were saying. And I mean, it's a lot of this guy. All right, anyways, people also watched. So this gives me an idea of what people are watching. We'll also look up SOFI. So I guess there's a common crowd here, and they also watch Jim Cramer and Ray Dalio. All right. So anyways, really interesting stuff there on the psychology of it all. SOFI stock, I bought it back, all of it. I mean, did you buy it back yesterday? I mean, short-term fluctuation, I'm not going to, you know, poo-poo on you for that, but we'll check on the model and kind of see what the underlying thesis is. It had this little jump up, then right back down. I assume that's because of the student loan stuff, because that actually hampers down the growth. And yeah, we're down 7.5% today. We are picking up here. Look at that. We're already up 6%. Not we, I'm not invested, but so yeah, just wanted a comment about that. A lot of commentary from YouTubers on this stock, very popular stock, from, you know, multiple different sizes of channels. Like I don't really know how big any of these guys are. They look bigger though, because, you know, 4.1K, 1.8K. It's like 10 times what this video is going to get. And then, you know, we'll probably get maybe around this on this one. So, but yeah, just that's my commentary on that. I think we'll go over to the presentation, get an idea of what the heck is going on. This is the sales pitch. All right, members. So they're going to pitch to us this members thing. Oh, look at all the members we got, growing members. Yeah, who are these members? Are they really high net worth individuals? I mean, do they check your credit to open up something here? Like, are they really rigorous and stuff like that? Again, like, you know, if you guys go to the like Chase, I think the Chase threshold is 250,000. Bank of America is like 100,000, and then you can get like the higher statuses. And then at Chase, you got to get to, I think, like 10 million after that to get even higher status. So like that's high net worth. And then even at 250K, you get a guy that's like, he's not dedicated only to you, but he's dedicated to just a small group of people within that area. And they definitely will help you. I think it's Chase Private Client is their program. And then with Bank of America, and it's very useful. Like, you know, you have problems and you have a person that can kind of help you with a lot of different things. And usually they'll kind of do some favors for you and kind of remove certain fees that might be on there normally, and then you just remove it completely because of your relationship with them. So I think that's like the added benefit. I don't really see that with SOFI here. So they're growing, but they are serving an underbanked class, and that's the thing. Okay, so all well and good serving the underbanked, but like, are you really? Again, I don't know. I just don't picture that. But yeah, right here we see record growth in products, cool beans, Galileo. Okay, so Galileo, I think, is the one thing that I find interesting. Like, it raises my eyebrow. And what Galileo is, it's basically a financial network system on the back end. And so you don't really see it per se, but they're essentially trying to become, and this is the words of the company, become, and this is actually not a red flag, but it's like a flag. It's like, oh yeah, okay. They're like, we're going to be the AWS of the financial industry. It's like, okay. AWS, the next AWS is AWS. Okay. You're going to be something else, and you're going to hope that these other guys don't compete with you. Okay. Let's be honest. And you're going to target a little niche, and you're going to beg for mercy that they don't come and steal your lunch, because whatever it is that you're doing doesn't produce that much, and they don't want to do that yet. And then that's how you'll survive. And then maybe you can grow and grow and grow in that niche, and they just are distracted by other things. And then you can expand into other categories and provide some other form of value to create sticky moat situation. So lending, financial services products, I mean, I don't really have to, this is pretty self-explanatory. This is their investment products, or at least what you can invest in. So financial services, productivity loop. So you have invest, money, relay, CC. Okay, cool. Financial review. Okay, so quarterly revenue is growing, except slowing down quarter over quarter from 277 to 280. That's a concern right there. So slowing growth for a company that's priced for growth, not good. Annual performance growth on the annual rate is pretty good. Adjusted EBITDA, I don't really care. Again, I completely agree with Buffett that that's kind of earnings, won't say the word, but you know what I mean. And for a company like this, I won't look at really the cash flows. I'll look at the GAAP net income. We just don't have that yet. And I assume, by the way, just by off the glance, that is because they're diluting you, and then they're adding it back, the dilution cost, into that EBITDA, and then that's how it's positive. My assumption before even looking at this. Adjusted revenue, implied revenue growth, 32%. Okay, so that's the reason why we're reading this is we're going to model this out when we get to the valuation model. Financial supplement. All right, cool. I don't really, yeah, whatever. All right. What I like is there's been no pat on the back slides. So nothing about being so cool, so amazing, so beautiful of a company with everyone so happy. So I like that, straight to the point, no BS on that end. I did see, again, some highlighting of EBITDA. Don't really care too much about that. Not going to hold it against them. Everyone does that. So let's actually go over to the model. All right, so here we are at the model. Let me actually, SOFI, let's type her in, see what comes up. Let's go ahead and change this because I know it's unprofitable. So yes, and financial institution, yes. Anomalies, no, we won't care about that right now. Let's focus on getting or penciling in the growth. So let's say 30, I know that they're growing, they grew at 72%. So we'll say like 50% on like the crazy high end. And then going down, we'll say like the middle terms. Let's say this is like 30, 25, 20, and 15. And then I'm going to use the custom weighting. Yes, because I'm going to push more heavy emphasis on this with a low emphasis on the high end. Okay. And then together, this will be about 10% probability. So I think that's fair. Let me actually zoom in for my mobile viewers. I forgot always to do that. Price target is $11.72 by analysts, implying a 45.23% upside. Listen to the analysts, don't listen to me. I'm nuts. I'm crazy. The analysts are infallible. We all know that. As long as this channel has been around and I've been doing videos on different stocks, we've proven time and time again that the analysts are just infallible every single time. So I don't even know why I bother doing videos. I should literally just have this thing come up, type in the ticker, and we just look at the price, and that's about it. My alter ego, Frat Boy Finance, will 100% be doing that, by the way. Anyway, required rate of return, 20% for including that margin of safety for something that has yet to prove itself. And that's, I think, is a fairly appropriate. But there's some added nuances here that I think we need to consider, and such as the dilution rate. So including the dilution rate, we can start to see where the fair value becomes. And by the way, I think I was fairly generous because I didn't even notice. I kept this at 20% profitability, and I assume they become profitable next year because I assume that, you know, they're getting close, and I'm like, all right, they're going to do it next year. Let's extend that out for 5 years. Let's give them about 5 whole years of unprofitableness. And we're going to consider that on year 5, they actually achieve profitability of 20%. Will they do that? I don't know. But, you know, let's assume that, whatever, 20%. I'm trying to be generous to them because I think what the point of this video is. Oh, and by the way, the model is actually picking up uncertainty regarding health of the balance sheet. So Altman Z-score of 2.33, and then the model's own ranking is not available. When it says not available, it's I don't know. That's what it's basically saying. It's like, I have no idea, man. And then so it says NA. So what would I be buying this stock? Probably not. This would definitely, if I were to ever buy this, it'd go into the speculative bucket immediately, just bloop into the speculative bucket. I wouldn't invest in it for the reasons like as the fundamentals of the business per se, because I don't see it. And because I don't see it means I don't understand it. You might understand it better than I do. I've expressed some concerns I have before you right here. And these were, you know, raw and honest expressions of opinion, such as I don't understand who they're targeting. I like we work through it together, right? I don't care what other people say. We work it together here on this video. The point of this video is for me to kind of talk out loud. And then you guys watching, it's as if, you know, think of it like I'm having a conversation with you. And so that's why I try to word it in certain ways. I want to kind of fish out of you guys some answers, right? So you kind of go along with this video and then think to yourselves as well. Maybe you have further questions or that you would like answered about this company that you might be able to answer yourself, such as who the heck are they targeting? Are they really targeting high income earners? Or is that just like a thing that they're saying? Because remember, in the banking industry or in the financial space, all the banks say that they're targeting like high clients, high quality clients. And that not to say the quality of person, quality of their pocketbook, right? Because what you want is clients that are going to pay you back. You don't want high interest clients that are simply not going to pay you back in mass, right? The value of that is not as good as lower interest bearing notes that are going to pay you back. That's the most quality. The reason why some things are high interest or high yielding is because of risk, right? So I think we've discussed that, for example, with a firm and stuff like that. Some people think that, you know, these high interest rates simply mean that these banks are making money hand over fist. And when in fact, the banks that make money hand over fist are actually the ones that don't like to lend to that stuff and kind of stick to the more traditional, not traditional, but safer things. Like, you know, JP Morgan Chase, Bank of America, they make money hand over fist. Well, they're primary dealers, which is a whole other category. And that's another thing. I personally would not like to touch a bank unless it is a primary dealer in the present world that we live in. So just on that note, I would kind of avoid it. I mean, I would probably touch American Express. They're not like a bank per se that you think of, but yes. So on that note, guys, I'll go over the risks and then we'll close off this video. So the risks I see with SOFI is if we enter a market downturn of any capacity, if the student loan moratorium continues past the August 31st deadline, that would be very negative because, again, a lot of their growth seems to be coming from student loans. Taking a look into the near term or short to medium term future for SOFI, we would see that being a financial institution is going to be heavily tied to the overall health of the economy. If that health kind of declines, so will the prospects for this company. So you got to actually think about that before making an investment. Now, some of you might actually have different strategies or different prospects or different predictions as to where SOFI is going to go. I'd love to hear them down below and disagree. Also, one question for you guys, because this will be a deciding factor whether or not I do something like this. So I received some interesting feedback from a Tesla bull from, I think, from the video a while back. And I know you guys probably have seen it. And I'm sorry if you can hear the storm. But if you guys want me to have him on and we have a little bit of a back and forth regarding Tesla stock, let me know, and then I'll actually try to set that up, and I'll send him an email, and then we'll set up like a live stream of sorts to go over it. Or maybe I'll discuss with him if he wants to do it live, or if he wants to actually like, you know, have a time to like prepare and stuff like that. Just let me know, and then I'll see if you guys want that content, and I'll have it on. And then be sure to check in for the live stream tomorrow on Friday. I'm going to see if Eric from Investing Sucks comes on. I got to check in with him because I know last week he had a very busy week. So we'll see if this week's a little bit less hectic. On that note, guys, thank you guys so much for watching, and I'll see you guys on the next one.